this is why we're seeing gold at $5,000 an ounce. It's not necessarily that gold's now gone up. The denominator is falling, folks. And when people recalibrate accordingly, they go into hard assets. And so whatever happens, you're not going to, if you devalue the denominator, the price of oil goes over 85. It doesn't matter. So I don't really know whether you're going to have a breakdown. Look, the breakdown can be slow and gradual with respect to the bond market, or it can be more violent. I don't know which it's going to be. What I do know is that it doesn't matter because the outcome is exactly the same. The outcome is just either more violent or less violent. In other words, it's either oil goes suddenly to $200 or it goes gradually to $200, but it's going to $200, folks. Now, I just put out what I very rarely do, which is like a price point. Now, I don't really like to do that because it's the wrong way to think about it. In other words, devalue the denominator enough, it can go to 100. Devalue the denominator more, it goes to 200. And we don't, none of us on this call know to what degree the government and the Fed end up doing that. But we know that that is the only answer they have in front of them to solve the problem. So there you have it. So I don't waste my time getting caught up on whether the price of oil is trying to cap it and whether they're trying to manage this. Sure, they always are, but they always have throughout history. And we know that those are just short-term failed attempts to essentially control what is a mathematical problem, and they can't control a mathematical problem. So you just position for what is the inevitable and be patient.
All right. Okay, let's move on to the next one here. All right. Kwame asks, hey, Chris and Jane, as always, thank you for taking the time. Chris, I know you have investments in farmland in Argentina. Have you ever considered Guatemala? The whole country is practically a big farm. If you did consider it, what were your thoughts regarding what are your thoughts regarding investing in Guatemala? If you did not consider it, why not? One more if you can. How do you know when to sell a stock? How do you know when something is expensive? In many interviews, there have been comments on being patient enough to do nothing, allowing a specific investment to rise to a 5-bagger. However, during the process, how do you know when it's expensive and it's time to sell?
Okay, let's start with the beginning. Guatemala, no. So there's two aspects to this, right? What we ordinarily talk about on this platform is listed equities, right? Because we're talking about my asset management business, Glenorchy Capital, where everything is listed equities. Same thing with Insider, we talk about listed equities. Buying into Guatemala is impossible for us. We don't have access to that market. There's not enough liquidity. We can't invest into it. So we don't. With respect to Argentina, we're listed in the equity space. Okay. Separate to that, through Subverterate Capital, we have private equity investments, farmland, housing, energy. That's in part due to our context in the country, due to what's happening there on a macro basis, and our sensing that opportunity. Guatemala, we've not seen the same thing take place, and I don't have the context in Guatemala that would allow me to, because it's sometimes it's like you can see an opportunity, but if you don't have the mechanics and you don't have the methodology to take advantage of the opportunity, it's just a nice story. Yep. And so you'll be smart to stay away, because if you go into something without the adequate connections and the adequate understanding of what you're going into, you have a greater risk that you will not do well or even lose money. And so those are important things, especially in private equity. So all of that, we're very comfortable with respect to Argentina, so we're happy to do so.